Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Monday, the 24th of June, and I'm Brian Fernandez. We have our regular Monday guest, Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, coming to us out of Singapore. Now, Vishnu, it's always great to have you on the show.
Hi, Brian. Good afternoon. Always good to start the week with BizTech, so thank you for having me.
Vishnu, for a start, we've got a lot of things on the calendar this week. What are some of the key things that we should be watching out for that could move markets this week?
Well, I think we've got an entire pick of whatever you want. So we've got economic data and a core, no pun intended, data that they're focusing on is core PCE in the US, because that's what the Fed focuses on. That distills down into markets making bets on when and how quickly and how much the Fed can cut. So that's why a lot of expectations may be anchored around that just before we go into the beginning of the new month and the new data that roll in. We've got political risks. So we've got French elections coming up end of this week, over the weekend, and the debates will start. So notably, Europe will be in focus, France will be in focus, and these things will give rise to a lot of volatility around yields on both sides, as well as the dollar and the euro.
Vishnu, can I ask then, in terms of the European elections and the French elections in particular, that's a snap elections that's been called out. What is the view from Asia about that?
I think the view from Asia is markets would be quite taken aback if Macron loses his majority and sway over the elections, because the assumption right up till now, until things were thrown into a fray when the snap elections were called, was that the policy continuity remains in place. So whether that means in terms of how France deals with China, how France deals with the US, how France deals on the Ukraine situation, an entire spectrum of things were hinged on some sort of political certainty. Now that needs reassessing. Also, if there are French policies turning slightly more inwards, right-focused, populist, then there may be concerns about the French debt and the fiscal policy, which would widen the risk premium. In turn, that could also weaken the euro. And so very, very quickly and very easily, the implications cascade out into what it means for Europe-China relationships, what it means for the dollar, and what it means for how Europe collectively interacts with the US, given that France is a core part of how Europe approaches many of its EU policies.
Now, Vishnu, then you spoke about China. That's one of the risks, obviously, but there are lingering Chinese risks on the table at the moment. Walk us through some of the key things that that are concerning markets right now.
Absolutely. So the problem now is the ability to pick up one or two risks and say this is it. It just isn't. We've had data coming through, so we're on the surface slightly more upbeat news about Chinese consumers. Retail sales picked up more than expected last week. We also had industrial production slipping back, but the stark reality is consumer confidence remains very weak. There's been no reprieve there. Credit growth has slowed down. Industrial revival and the pickup in exports was supposed to be on a very good footing, but now, focus back on sanctions, so on and so forth, means that might be somewhat hobbled along the way. And President Xi has also upped the ante in terms of the abrasive rhetoric against involving Taiwan. That's one. So the geopolitics of it is flaring somewhat. Also in terms of the sanctions and the trade tensions, whilst his Premier Li Qiang is on a tour with a charm offensive, trying to court countries, what's inescapable is in the very near term, tariffs will probably mount, whether it's with EVs or other competitive industries. All of these means China runs two particular risks. One is the inability to export its way out of some of its domestic problems. The other is how it deals with excess capacity, because strategically speaking, excess capacity, once it's exported, can lend competitive advantage that lessens the blow of the shakedown that comes through after time because there's just too many producers.
Yes.
If not for that, then this is a process that's hastened and can actually cause a lot more economic pain. So that's, I think, front and fore of the economic thoughts and the policy thoughts in China. So these are the big factors that they're dealing with and they need to grapple with.
Now, one of the things that investors are also watching out for, Vishnu, and is Australia. Inflation data is due on Wednesday, and particularly, I think investors are looking at the possibility then of potential rate hikes after the country's central bank discussed it in the last meeting. What are your thoughts on this?
I think it's still a very, 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 very delicate call. You are absolutely right. The last central bank meeting, the rhetoric, all of this has come out sounding more hawkish than investors expected. That's given some tailwinds to the Aussie dollar, but that's a bit like cutting off your nose to spite the face because a rate hike is not unequivocally good for Australia. Yes, it could tame inflation, but here's the thing, Australia's policy transmission, so to speak, which means every time they tighten, how much it actually hurts households and businesses. That sensitivity is a lot higher in Australia than it is in the US. So the problem here is the economic pain of policy is far higher than the interest rate differential impact on the Aussie. So put simply, the support for the Aussie dollar is coming at a very high economic cost vis-a-vis the US, which is why the policy conundrum there is a lot sharper than it's generally appreciated. So it's not as simple as a 25 basis point hike in Australia is the same as a 25 basis point hike in the US. It simply isn't because of the impact it has. It's far more variable. Inflation data, I think the RBA will take into account a slightly longer runway. So they might sound more hawkish, but the instinct for them to imminently pull the trigger, that may be somewhat more tempered than the rhetoric has let us on, given the underlying economic pain it could cause. But that remains to be seen depending on the details of inflation. So in the particular thing that people are watching would be the services inflation. If that's too hot, then that's when I think the risks of the RBA reacting or responding would grow substantially.
Okay, speaking of rising interest rates and supporting currencies, last week, BOJ Governor Ueda told Parliament that central bank could raise rates as early as July. What is your view on it, especially your house view, given that you're a Japanese bank?
So the two things that have come across is increasingly there's an allusion to the possibility that the BOJ may move a lot sooner and a lot faster than earlier expected. So rather than having their policy rates rest at 50 basis points, we may look at 50 to 75 basis points as the eventual outcomes in terms of how far they go. But I think the proper nuancing that's needed here is we need to look at policy holistically and collectively. So the corresponding question and the complementary question here ought to be, how much then would the BOJ have to scale back its bond buying? Because these two policies work in tandem. So our sense is, holistically speaking, in terms of tightening policy, we think the BOJ is a lot more concerned about underlying household and consumer weakness and the inability for wage increments to sustain at current pace. So they're a lot more worried about that. But because markets are taking a diametrically different view and the yen pressures are excessive, the calculus at the end of the day might be, okay, let's hike sooner, hike a little bit more, but hold back later. So it might be in terms of tactically reordering the policy outcomes rather than becoming fundamentally more hawkish. We don't think Governor Ueda is fundamentally and dramatically more hawkish because if you read his deeper thoughts, he remains concerned that households still face a lot of burden, and that translates into fragility, not overheating economy.
On that note, Vishnu, as always, great insights. Thank you very much for coming on the show.
Always a pleasure, Brian. Thanks for having me here.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.bistec.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.